Welcome to Crack Your Interview. In today's session, Module 9, Hands-on Practice and Case Study on Final Accounts of Insurance Companies, we will walk step by step through the full accounting cycle of an insurance company, from issuing a policy, to booking premiums, handling claims, reinsurance, reserving, and finally preparing a profit and loss account and balance sheet. This is a practice-based session designed to give you real-world accounting exposure. In this session, our objectives are 1. To understand insurance accounting through a hands-on case study. 2. To practice policy issuance and premium booking with journal entries. 3. To work on claims accounting, both at the time of claim filing and settlement. 4. To apply reinsurance and reserving concepts in practice. 5. To prepare a sample profit and loss account and balance sheet for a general insurance company. And finally, to practice some mock interview questions and exercises. Our case study company is ABC Insurance Limited, a general insurance company. We will simulate its operations, issuing policies, booking premiums, recording claims, handling reinsurance, creating reserves, and preparing final accounts. At each stage, we will stop and practice with small exercises so that you gain confidence in applying these concepts. Let's begin with policy issuance and premium booking. Suppose ABC Insurance issues a fire insurance policy on 1st April 2024, with a premium of 1,20,000 rupees for 12 months. The accounting entry is straightforward. Debit bank with 1,20,000, credit premium income with 1,20,000. Now, if the policy starts in the middle of the year, we must calculate unearned risk reserve, or URR. This represents the portion of premium related to the unexpired risk. For example, if a policy starts on October 1st with the same premium, only 6 months are earned in this financial year. Therefore, 60,000 is treated as earned, and 60,000 as unearned, which goes into the reserve. Exercise for you. Take 3 policies with different start dates, April, July, and December. Calculate the unearned risk reserve for each. Now let us move to claims accounting. Suppose a claim of 50,000 rupees is filed in October 2024 and settled in November 2024. At the time of claim intimation, we pass the entry: debit claims incurred 50,000, credit outstanding claims 50,000. When the claim is actually paid, the entry is debit outstanding claims 50,000, credit bank 50,000. Second example. Suppose outstanding claims reserve, or OCR, is 80,000, and we estimate incurred but not reported claims, IBNR, as 40,000. Then, total claims to be recognized in accounts are 50,000 plus 80,000 plus 40,000, which equals 1,70,000. Exercise for you. Compute net claims for the year, considering both paid and outstanding claims. Insurance companies often pass part of their risk to other insurers. This is called reinsurance. Suppose ABC Insurance cedes 30% of its fire insurance business to a reinsurer. That means, from the 1,20,000 premium, 36,000 is ceded. The entry is debit premium ceded 36,000, credit reinsurer account 36,000. Now, if the insured claim is 50,000, the reinsurer reimburses 30%, that is 15,000. Entry: debit reinsurer account 15,000, credit claims incurred 15,000. This way, reinsurance helps in spreading risk. Exercise: take 3 different policies, apply a ceding ratio of 30%, and calculate both ceded premium and recovery on claims. Now let's cover reserves, which are extremely important in insurance accounting. There are several types of reserves: unearned premium reserve or UPR, outstanding claims reserve or OCR, incurred but not reported reserve or IBNR, and catastrophe reserve for large losses. Here is an example. Premium earned is 12 lakh rupees. Unearned premium reserve is 6 lakh. Outstanding claims are 3 lakh. IBNR is 1 lakh. This means the surplus must be adjusted to reflect these obligations. Exercise for you. Given premium earned of 15 lakh, UPR of 7 lakh, OCR of 5 lakh, and IBNR of 2 lakh, compute the adjusted underwriting surplus. Now let's prepare a sample profit and loss account for ABC Insurance Limited. Net premium earned is 12 lakh. Reinsurance commission received is 1 lakh. Investment income is 2 lakh 50,000. This gives us total income of 15 lakh 50,000. On the expense side, net claims are 8 lakh, commission paid is 1 lakh 20,000, and operating expenses are 2 lakh 30,000. Subtracting these gives us an underwriting result of 4 lakh. Finally, after adding investment income, profit before tax is 6 lakh 50,000. This format is as per insurance company accounting norms. Now, let's look at the balance sheet of ABC Insurance. On the asset side, investments 20 lakh, cash 3 lakh, premiums outstanding 2 lakh, and fixed assets 5 lakh, giving a total of 30 lakh. On the liability side, share capital 10 lakh, reserve 6 lakh 50,000, unearned premium reserve 6 lakh, outstanding claims reserve 3 lakh, IBNR 1 lakh, and other liabilities 3 lakh 50,000. The total liabilities match the assets at 30 lakh. Notice how reserves occupy a significant part of the liabilities. Let's now prepare for interviews. Some common questions are: how are unearned premiums treated? Why is reinsurance important for insurers? What is the difference between outstanding claims reserve and incurred but not reported reserve? How do insurers recognize revenue in financial statements? And what are the key solvency indicators used in insurance? To recap, this module connected theory to practice using a full-cycle case study. We prepared journal entries for policies, premiums, and claims. We applied reinsurance and reserving concepts. We prepared a sample profit and loss account and balance sheet. And finally, we practiced mock interview questions. This session has given you both conceptual clarity and practical exposure, which is useful not only for exams and interviews, but also for actual accounting roles in insurance companies. Thank you for learning with Crack Your Interview. If you found this case study useful, please like, share, and subscribe so you don't miss the upcoming modules.